Gentlemen, I must ask, you guys got it horribly, horribly wrong.
Yeah.
Projecting 1.5%, we got 3.1%. Milan, what went wrong?
Nothing went wrong about the Q4 GDP data. As a matter of fact, everything went right. A lot better than we expected, I have to say. We're projecting 1.5%. I think there's a couple of things that we didn't expect. From the production side, we thought that agriculture had really strong base effects in Q2 and Q3. Probably wasn't going to be sustained in Q4, but a very strong upside surprise. Again, that post-drought recovery in agriculture remaining very strong. So about 37% again, quarter-on-quarter SAR. But I think outside of that, the services sector also had a really strong quarter. And the issue there is that you don't have high-frequency data during the quarter to get a sense of what is happening, for instance, to financial services. But the tertiary sector also had a really good quarter, and I think from that, supporting this really strong ground.
Maarten, for you, was agriculture also the big miss?
Yeah, I think so. Second quarter, third quarter, we've seen growth in agriculture north of 30%. And at the time, we knew it's coming off a very low base. The drought is over, and we had a record crop. So at the end of quarter three, we said that this tailwind is probably going to fade, and I think economists took that into consideration for the fourth quarter. And then again, it surprised, like you said, 37.5%. So where we stand today, again, we can't expect agriculture, which is actually a small part of the economy in terms of relative to the other sectors, to keep on supporting growth that way. So I do think that tailwind is going to change in a headwind going forward. Having said that, if you exclude agriculture altogether, then the 1.3, 1.5% growth we've seen for 2017 drops to about 1.1. So it's not a disaster. So the rest of the economy did reasonably well, but agriculture was definitely a main factor contributing over the past 3 quarters.
It's a hot topic, the agriculture right now, especially with this land bill. I mean, could this be the potential headwind you're talking about?
No, I think the headwind I'm referring to is the fact that, coming off the low base, the drought that's behind us, and then a record crop. Unless we get that again this year, but then the base is already high, you can't expect agriculture to keep on growing at 30%. So that's more the headwind I'm talking about. That aside, my concern is that if you look over the year, things like manufacturing, trade, and construction, the bigger part of the economy where you really need to see job creation, that still struggled. So yes, the number looks much better than everyone hoped for 2017. February in the budget, the National Treasury said growth of about 1%. Now we're sitting at 1.3, 1.5. So that immediately creates an environment for all your fiscal targets to look slightly better. Earlier this week, the Minister, Nene, mentioned that they're likely to upgrade their forecast in October. So this kind of momentum that we're seeing coming through right now is likely to continue in this year. And if anything, I think 28 started off a very bright note, and let's hope it can continue. The rand this afternoon showed us that the market's lovely,
loving it.
And the reason for that is, I think we're pretty sure now that Moody's won't downgrade us, because they were very happy about the budget.
I don't know, you were pretty sure about your 1.5%. I don't know if I can believe you.
But another thing I'd like to add to Maarten's point is that, so we've already started to see some high frequency data for Q1 2018. The Absa manufacturing PMI is its highest level in about a year. The market PMI also is its highest in about a year. So momentum is there. I think the big question now is how much of this apparent improvement in sentiment is actually going to translate into real economic activity for the rest of the year.
Exactly, and particularly in the industry that our president wants to make a sunrise industry, which didn't actually perform so well. I'm talking about mining right now. I understand a 4.4% drop in mining production. Gold and platinum miners, the standout underperformers there. I mean, how do we turn that situation around? Well,
look, I mean, it was just one quarter that was poor in a really good year for mining, actually, because when you look at the numbers for a year as a whole, mining was actually up. But you're absolutely right. I think there have been some policy issues that have actually held back investment in that space. Minister Mantashe has made it clear that he plans on sorting out the mining charter in the next 3 months. It will be significant for confidence. But even beyond that, there's the issue of the MPRDA, which has been unresolved now for about half a decade. I think it'll be important to get some momentum in terms of finalizing the legislative framework, getting that right. I think it'll be critical for mining investment going forward. But even globally, from a commodity price perspective, I think the environment is still fairly supportive. So there is scope for mining to do fairly okay in 2018.
Talking about investment, one thing that stood out for me here, the growth in gross fixed capital formation, sort of private sector investment there, 7.6% or so about increase. That was in the fourth quarter. So if I do my calculations correctly, that was private sector saying, okay, Cyril Ramaphosa is going to win this ANC presidential race. Let's start taking out our money. Correct me if I'm wrong.
That's a very volatile number, so it's up and down quite a bit. We had a couple of negative quarters. At the time, we probably took that as a view that people are wait and see. Let's see what's going to happen in terms of leadership change and policy. That is a number that you want to see growing quite healthy, because that's a commitment to fixed investment in the economy. So there's a couple of one-offs that come through in those numbers, like machinery imports and transport equipment. But having said that, on a year-to-year basis, it seems like there's some improvement. Hopefully now, with all the changes, reintroduction of confidence, consumer and business confidence, that number can probably start to increase a little bit more and contribute more to more sustainable growth going forward.
I mean, Miyelani, do you think we are finally at that point now where we can start growing in sync with the rest of the world that's been outperforming compared to what we've been doing?
Yeah. It's a good point. We don't think that there is sufficient momentum for us to get to where global growth is, right? So the projection for this year is a figure very close to 4%. We don't think we're going to get there as yet. There are still some big policy challenges in South Africa that still need to be addressed, and I think there is sufficient reform momentum behind President Ramaphosa, and if he's able to sort of try to look around and grab those low-hanging fruits first, there might be an important signal for business, and I think it could be a big boost to confidence and certainly take us closer towards I think, getting closer to where global growth is going.
Household consumption growing by 3.6%. One thing that can boost that number even further is interest rate cuts. I mean, are we going to get that this month?
Well, I think there's a good chance. Inflation is quite stable at this point in time. There's a little bit of upside risk given the VAT increase. The currency is behaving, so that allows Reserve Bank to really consider a possible cut. Stronger economic data, they might think, well, maybe it's not necessary, and they might want to hold. But if you think about the global environment, we're probably heading towards a couple of hikes in the US this year. So this is probably a golden opportunity for the Reserve Bank to actually put through one cut, because later this year they would probably need to try and keep the differential with the US rates intact. Otherwise, the currency might start to depreciate too much.
And Miyelani, just wrapping up with the ratings agencies, at 1.3%, right, growth is a lot better than it was projected. But as I understand, we're still underperforming our peers in the junk-rated category grouping. So why wouldn't Moody's downgrade us then?
Yeah, that's a really good point. But I think the other key factor to the Moody's decision to put us on review for a downgrade, it sort of came on the back of a really weak MTBPS that said, we're going to undershoot our revenue target by 51 billion rands. We're probably going to see our debt to GDP ratio rise to close to 60%. But we now just had a budget that I think sort of reversed a lot of that, right? Saying South Africa is still committed to fiscal consolidation, it's still committed to stabilizing its debt trajectory over the medium term. And we think that together with the strong economic data that we're seeing may be sufficient to sort of hold that off for now.
I'm not going to be happy with you guys if you're wrong again. I won't be. But thanks so much for your time. That was Maarten Ackerman from Citadel, and of course Miyelani Maluleke, Senior Economist at Absa Capital.